So as I mentioned, first session is all about audio and entertainment and progressing the business side. And without further ado, I'd like to welcome up Matt Payton, who's the CEO of Radiocentre, and he'll give a short presentation, and then I'll be back on stage later. Matt, thanks so much.
Thanks, Jack. Thank you, Jack, and good morning, everyone. So I'm Matt Payton, I'm Chief Executive of Radiocentre. I'm sure most of you know we're the industry body for commercial radio. And it's great to have the opportunity to kick things off this morning with an overview of the commercial audio market in 2025. And hopefully provide some useful context for the rest of the morning ahead. Now, summarising the whole market obviously is quite a broad brief, but at Radiocentre we always try and be balanced, and of course our remit now covers all forms of audio provided by commercial radio broadcasters. So I'm going to start this morning by addressing some fundamental questions that affect the whole sector. And specifically, I want to look at where we are now in terms of audience and revenue, consider what commercial audio offers, and why this benefits advertisers, and the way that multi-platform audio can really help businesses, particularly in uncertain times, and how it's possible to harness these benefits by adopting best practice. And what I think this approach allows for is an optimistic take on the power of commercial audio, while also being rooted in the reality of some of the current economic uncertainty that we face. But there's lots of reasons to be optimistic about the future of audio. We've seen an explosion in formats and content and choice in recent years, fueled by technology and innovation. As a result, audio is stronger than it's ever been in many ways, a constant companion, whatever our mood, whatever our location. But this revolution in audio has also made life complicated in some ways, with an unprecedented range of options and data-driven solutions now available. So it's probably not surprising there's a real demand from advertisers for more clarity and a deeper understanding of the audio market. There's something that came through really strongly in a survey that we commissioned last year amongst agency customers. This feedback was part of the reason we teamed up with the consultancy MTM to provide an extensive overview of commercial audio in our new Speed of Sound report, mapping out its scale and its potential benefits. And to be absolutely clear what we mean by commercial audio, we're looking solely at ad-funded audio platforms. So that includes commercial radio, ad-funded podcasts, and ad-funded music streaming platforms. But it doesn't include audio where it's not possible to buy advertising in the UK. So it explicitly excludes BBC Radio, BBC Podcasts, and subscription streaming services. And the purpose of this new report was to try and answer some of those basic questions, the what, why, where, and how, and to do this by providing clarity on the UK commercial audio market, and understanding the broadcaster role within this, and crucially, identifying the benefits of multi-platform audio, as well as providing practical guidance for advertisers. And as part of this exercise, we spoke to audio advertising experts from across the industry, including media owners, technology partners, and agencies. So thanks again to everyone who took part in that exercise. These insights provided us with a rounded perspective, giving us a better understanding of some of the opportunities and the challenges. Our start point, though, was to look at total listening using Radar Midas data, which is the most well-established source of measuring multi-platform audio. And this enabled us to see the way that hours have been growing in recent years, demonstrating a 15% increase since 2018. So perhaps not too surprising given commercial radio's resurgence over that period and the growth in connected audio listening. But still an impressive feat when you consider the level of competition out there for audience time. So with more listening than ever before and total weekly reach of 76%, ad-funded audio is clearly delivering a critical mass audience. But we wanted to go beyond those headlines and understand the total market and how it fits together. And by using the Radar Midas data, we were able to get a better sense of how this audience is segmented. As a result, we know that broadcast radio stations, mainly on FM and DAB, still represent 56% of listening to ad-funded commercial audio. In addition, linear radio via IP, so mainly radio on smart speakers and other connected devices, represents a further 28%. Beyond linear radio, we know that ad-funded, non-BBC podcasts represent 11% of listening to commercial audio, although that is growing fast, of course, with a further 5% accounted for by listening to ad-funded music streaming platforms. The other element we were able to establish as part of this analysis was that commercial broadcasters like Global, Bauer and others provide access to around 90% of ad-funded audio listening, once you take into account their share of connected audio and podcasts. Now that's significant as it shows that broadcasters continue to lead the way and remain essential partners for those advertisers that want to deliver the biggest impact overall. So as well as this breakdown in listening, we wanted to provide some greater clarity on advertising revenues for all of the elements that make up commercial audio. So working with WARC and the IAB, we developed a way to improve the accuracy of total audio ad revenue and remove any duplication in reporting. We don't yet have full figures for 2024, but we do have data for the 12 months up to Q3 last year, the moving annual total, or MAT as it says here. And we know from this that total revenues for commercial audio were up 5.5% year on year, reaching a total of 863.4 million. We're also able to break this down to show the sources of revenue that make up this total. And this shows that broadcast radio still accounts for the vast majority of audio ad revenues, almost 664 million during this period. In addition, digital ad formats from commercial radio broadcasters, so their in-stream and podcast revenues, adds another 75 million, with digital audio revenue from other streaming and podcast providers generating a further 124 million. Now you can look at this in different ways, but it's interesting that broadcasters account for 86% of total revenues, broadly in line with their share of commercial audio listening. And this background also helps to explain why we're so positive about growing the overall audio market. The opportunity here is to expand the overall audio pot rather than cannibalize the investment that already exists. But overall, the audience and revenue data is really positive and very clear. And as you can see, everything is rosy in the garden of commercial audio. It's a medium in rude health, and it presents a great opportunity for brands and advertisers to connect and influence audiences. And while all that's undoubtedly true, it isn't the full picture, clearly. And there's definitely clouds on the horizon, and we'd be foolish to ignore them. And we already know that the UK economy is slowing, which is unlikely to be good news for the ad market, and we've seen that come through already in the latest IPA bellwether report. And some of the erratic decisions coming from the US, most notably the disruption caused by the proposed trade tariffs, are not helping, as reported by Jack in the Media Leader recently. Now, there's very little, obviously, we can do about that directly, but we can take action to alleviate some of the pressure on ad budgets. So as well as talk about the current state of commercial audio, I wanted to take a moment just to highlight some of the strategies that advertisers can use to help their businesses, keep their businesses ticking over and stay ahead of the competition if times get tough. And of course, address that question of what audio can offer and the role it can play based on the evidence and the findings of our latest report. So what are these strategies, briefly? Well, firstly, while it's probably easier said than done, there's significant evidence that demonstrates that the overall case for protecting marketing investment and maintaining spend when others are cutting theirs. I'm not going to cover all of the arguments here, but we know from previous downturns that companies that continue to advertise in difficult times recover more strongly and more quickly. However, the reality for many advertisers is that external events could well mean that budgets are squeezed, although sort of daunting sales targets may well remain in place. In this instance, it may be possible for advertisers to compensate, or at least partially, by adapting their media mix so it's more efficient, shifting money between media to offset a reduction in budgets and deliver those short-term sales targets. But while a focus on the short term is important, and let's face it, probably inevitable, the evidence also suggests it's crucial to keep an eye on the future and consider the long term to achieve the best results overall. And finally, we know that priorities can shift rapidly during challenging times, and that advertisers need to have the flexibility to react quickly to address new challenges and harness new opportunities as they arise. Being first to market with those relevant messages can have a significant and positive effect on consumer perceptions and behaviour. And it should come as no surprise that multi-platform audio has many of the qualities that deliver these advantages, both in the short term and the long term. In fact, our Speed of Sound report looks specifically at some of these benefits of using radio and digital audio through this lens of short-term and long-term effects, demonstrating the way that audio can combine in order to convert existing demand by delivering those rational messages to create short-term or immediate response, and generate future demand by delivering long-term brand-building effects. For example, audio offers tangible benefits in terms of demand conversion. And while I don't expect you to absorb all of the detail here, it's all in the report, the important point to take away is that radio at the bottom here and digital audio at the top work together to deliver and enhance these effects. So with radio offering a powerful means to target at key moments, provide flexible short-term sales messages, and drive short-term response. While digital audio builds on this, providing more granular targeting, enhancing relevance, and enabling brands to optimize their campaigns. This combination delivers obviously multiple benefits for advertisers, but just to take one powerful example, this is from the latest ThinkBox study. We can see that audio delivers the highest return on investment in the short term, significantly outperforming those pure play digital channels. And there's a similar positive and combined effect from audio for longer term brand building or demand generation. With radio, again at the bottom here, providing mass reach and impact, a powerful emotional connection, and brand salience that increases awareness, relevance, and trust. With digital audio at the top, extending reach across targeted groups, providing a richer emotional connection using techniques like dynamic creative, and opening up benefits of targeted audio advertising to more advertisers. And the evidence backs this up too, as audio's proven to boost advertising effects for all sorts of brands when used as part of a wider media mix. This analysis of 841 in-market radio campaigns highlights how radio advertising improves overall campaign cut-through across a range of brand metrics, including ad awareness, brand relevance, brand trust, and crucially, purchase consideration. Audio also delivers the second highest full-term ROI after TV, again, outperforming those pure-play digital platforms. So, quite a lot there, but to summarize these benefits and the way that audio meets these needs, when budgets are under pressure, it's vital to make sure every advertising impression has an impact and elicits a positive outcome for your brand. And the evidence shows that when used as part of that wider media mix, audio helps advertising campaigns cut through more effectively. As a result, audio is proven to boost the bottom line in the short term for advertisers, with evidence that allocating money to radio from other media can significantly improve returns. And while it's natural for advertisers to focus on the short term, it's important to balance this out with longer term objectives, with audio offering an effective means of both providing an immediate return while also supporting longer term brand growth. And the short turnaround times in audio, in both media and production terms, enables advertisers to get messages on air quickly, responding to and benefiting from evolving market conditions. So, audio can clearly play a really important role during uncertain times. But the final point I said I would address today is how advertisers can harness the power of audio to optimum effect. And our Speed of Sound report seeks to answer this question by highlighting 3 clear examples of best practice. And these boil down to allocating 20% of your media budget to audio, combining multi-platform audio to maximize reach and impact, and applying creative consistency. And just finally, just to summarize these briefly, as we've already seen, the ROI efficiency of radio means it can have a powerful impact on overall campaign ROI. And in practice, this means that as total campaign ROI goes up, as radio's share goes up, I'll say that again, it means that total ROI increases as radio's share of the budget grows. That's what we're looking at here. And it peaks at around 20% share of spend for audio. Now, 20% might sound quite ambitious for a medium that averages around 5% overall in terms of media spend, but it is backed up by the evidence from real campaigns, and it isn't as unusual as you might think. In fact, around half of the top 20 advertisers, radio advertisers in the UK, spend 18% or more of their budget on radio. Combining audio formats should also be a no-brainer based on what I've said already, especially given the complementary roles of broadcast radio and digital audio in optimizing campaign reach, which is the single biggest factor in driving ad awareness, as this analysis of 1,000 previous audio campaigns established. This is in addition to the primary role of weekly reach in converting demand in the short term. And finally, there's a real power to be harnessed by applying creative consistency, whether using audio for building brand trust to help generate that future demand, or using consistent creative factors to convert existing demand. And this link between creative consistency and improved campaign performance comes through really strongly, also in terms of ROI, as shown in this analysis of a range of FMCG case studies from Ubiquity. This demonstrates that radio campaigns that most closely match TV creative, the ones in the middle in that chart, perform most strongly. Now, I'm aware I've covered quite a lot there and thrown out a lot of numbers of charts at you first thing in the morning, but there's more detail in the report and plenty of information and resources also available at the Radiocentre website. But to sum up, and hopefully set things up a bit for today, these are the key takeouts I'd like to leave you with. As we've seen, total commercial audio is growing and presents a significant and expanding opportunity for advertisers. And it can only help for us to have more clarity about this market, on the scale, scope, and benefits of using commercial audio to help inform investment decisions. And by learning the lessons of best practice, combining radio with digital audio, advertisers can achieve even better results, which is especially relevant given the current economic uncertainty. And that if we focus on this combination of benefits, best practice, and innovation, then there's real growth potential in this market, and I think that's something we can all agree is in everyone's interest. Thanks very much for listening.